All right, so back to the PowerPoint. All right, here. So entries at key areas. When watching price, you should be looking for entries when price gets at key areas. This is because price can either break through the key area, retest, and give us a reason to get in, or it could respect the area and then bounce off of it. Price can also reach the area, not break through, consolidate, then come down or up, and we can analyze price off of that. Or it could break above or below the area, then consolidate, which gives us strong reason that it'll continue moving in that direction. So we could plot our key areas as we normally do on the 4 hour or daily time frame and get an overall bias for the pair. Right now I am on the 4 hour time frame and looking at the price as it reaches a key area. When price reaches a key area, it is important to see if price is above or below that area. Now that price is below this area, we can see several things. One, a trend line from the top to the three hits, and secondly, a counter trend line, and even a Fibonacci. We can see our take profits, uh, and we can see our next take profits. So now we can scale down to the 1 hour to get more precise price movements. So here, as you can see, hit one, hit two, hit three, counter trend line. It's below the key area, so it created a downtrend, boom, and a counter trend line up to retest the area, and a Fibonacci even here too. And we can see our key area, our take profits, negative 27, negative 61.8, and probably the next key area. So as we scale down, we see price creating rejection candles as the wick is way larger than the body. As we can see this, we are more biased for sells. We can now scale down even more to the 15 minute. As you can see here, wick is way larger than the body, giving us conviction that price will continue down. So as we see, price pushes down with the lower high and the moving average crossover and strong momentum. So we see the strong bearish momentum. This gives us enough confluence to enter with my stop loss above this lower high right here and my take profits at the areas in green. You can see here. Take profit 1, 2, 3, and 4. As we let price play out, we can see that our stop loss never got hit, but was close. Price reached our TPs. This shows how to analyze and wait for market structure when seeing price reach key areas. We could also have our stop loss above the key area too, which would have been a stronger stop loss because we could see price retest this trend line and then continue down. But if we got stopped out, we could have just re-entered. The reason we did not scale in here was due to the fact that price didn't break the low. We also had no area to see price strongly reject off of, as seen in the last scale in. This is why in this example, we have to wait for the break of the low, as this is such a strong retracement. Scaling in is risky, and you need to wait for market structure to tell you to enter. You could have scaled in here due to the fact that price created a lower high just above, which would have given you an area to place your stop loss, and I will scale down to a 15 minute to show you how you could have entered right here. So as we see, moving average strongly crossover right here. See a below price, then strongly push above price. We could scale in on any two of these candlesticks and enter with our stop loss above this low. As we could see, a double top and a lower high. Take profits could be either at the negative 27, negative 61.8, or the 1.9 flat. So we see this lower high right here, double top. We're going to go to Fibonacci extended on and entries. So Fibonacci entries can be made easier and more profitable as this tool is truly helpful. When price hesitates at the 38.2 or 50, it's rare for price to go to the 61.8 or 78.6 without it being a reversal more times than not. Your stop loss could be a little above or below the next level, or two above or below the next level. TP1 is always negative 27 or the previous high or low depending on price action, and TP2 is always 61.8. TP1 could either be the like low it's matching, as you see here. It could be here, here, or it could be like these. So this would be 1, 2, and 3. All right, so now we can see that price has created a candlestick pattern. Now we can see that price has created a candlestick pattern, the inverted head and shoulders, with the higher low above the 1.92500 key area. We could see price is now retracing at this area of support. We are now waiting to see if price pushes up or continues going down. Oh, I don't know why this was. Okay, it was duplicated. Alright, well, mishaps. But firstly, we mark our key areas, and now we can analyze price, and we can see how price is above the key area right now. We can scale in to analyze deeper. Now we can see that price has created a candlestick pattern, the inverted head and shoulders, with a higher low above the 1.92500 key area. We can see price is now retracing at this area of support. We are not waiting to see if price pushes up, or we are now waiting to see if price continues pushing up or continues going down. Price pushed up, but we couldn't have entered with a really good risk to reward. So we wait, and price provides another entry, which we can enter off of. Moving average crossover, retest of support, higher low, Fibonacci extension, many confluences. We can have our take profit at the negative 27 and the negative 61.8. Can't really have it at the previous high right here because price is like right next to it. So negative 27 and negative 61.8. We could put 2 trades, one for each, take profit. Once price hits the negative 27, we are out of the trade for the with the TP at negative 27, but we are still in the trade for the negative 61.8 take profit. So we could move our stop loss to break even. So this is now a risk-free trade. So even if price were to come all the way back down, we would have left with profit out of this trade right here, and we wouldn't have lost anything for the second trade with the TP to negative 61.8. So price ends up hitting our negative 61.8 TP. So now we can wait for price to create more structure for us to enter off of. As we can see, price continues dropping down, or price drops down. We can now place another Fibonacci and wait to see price give us confirmation to enter on the 15-minute time frame. We can see price create a lower high, so now we can enter with our stop loss slightly above structure as we do see price dropping. Again, with our stop losses at the same areas, with our take profits at the same areas, we could do 2 trades. Since negative 61.8 is so close to the next key area, 1.92500, we can have our TP there instead. So instead of negative 27 and negative 61.8, we could have negative 27 and 1.925 since it's so close. We ended up getting stopped out. We also see a bullish candlestick pattern getting formed as price pushes down. After price pushes down, being the inverted head and shoulders, which gives us confluence to use the Fibonacci again in the moment, and then analyze. You can see this right here, Fibonacci right here, and we see it push through. So that was it for that. So yeah.